Okay, everyone, welcome to the weekend video. I'm going to try something a little bit different today. The market is not closed yet. It's kind of late afternoon, into evening time here in Ireland. Well, London market is closed. So I don't know what's going to happen from here on out in New York. So we might be a little bit out on the final closing figures. But I wanted to get the video done early because I didn't want to be falling asleep while I was doing the damn video. So I listened back to a few of the videos and I swear I could have dropped off in the middle of it. So I wanted to keep it a little bit more lively while I'm still awake and it's not 11 o'clock at night. So that's what I'm going to try today. So forgive me if the final figures are a little bit out. I'll probably nail that in the update tonight anyway. So, okay, this is euro dollar. I'm just going to plow right through it and I'm going to keep it a little bit shorter as well. I'm going to aim for the 15-minute mark. So that means 3 minutes on each. Okay, so just whatever, 2.5 minutes on each. Okay, this is euro dollar 4 hour, and finally, after waiting for so long, finally euro dollar starts moving down back into a long-term hope. Well, I'm not going to say hopefully, but in terms of the wave count, hopefully back into a long-term downtrend. I use the euro. Hey, what am I going to do? I'm stuck with it. Okay, so we switched last week to full bearish mode, and we got finally this week we got a move down in compliance with that point of view. So we may well have wave B here complete, and now we're starting on the journey down into wave C. So let's see how that works out. As usual, as a trend begins or as a tentative first movements within a trend, you're really guessing at the actual degree of the movements that are happening. So I don't know whether, well, this will most likely change. The labeling that's on it right now will most likely change, probably up a degree or two even. We don't know how that's going to work out. But as it develops, the characteristics of each move will kind of direct my thoughts on what should be the correct labeling. Okay, so far we've got a wave 1 down in green, wave 2 in 3 waves up in green, and now we're starting to move down into a possible wave 3 green, and we may even have 1, 2, 3 of that wave 3 complete. That remains to be seen, but going on, let's say the last couple of days action, that's I'm shifting towards that point of view. There's a definite invalidation point on this particular wave count, which would be the wave 1 brown here, this particular low here. If that's broken, well then this 5-wave pattern to the downside is invalidated, and then we may well be looking at a 1 2 1 2 1 2 pattern. Okay, so let's go down into the short term to see how that is looking. So here's our wave 1 in green, 3 waves up in wave 2. So now we're tracking wave 3 green. So 1, 2, a possible wave 3 complete. I've altered this short-term count today. Just on staring at it for a while, it's led me to believe that we could be seeing the end of wave 3 down and a possible move into wave 4 brown here. The reason being that I had labeled a 5-wave move down in a possible wave 1, and Fibonacci extensions have kind of given us a target for wave 3 green down around the low 119 area. So if you go for the 4-hour chart here, you see that 161.8 extension of wave 1 from the high of wave 2 gives us about 118, 119. So the fact that we're kind of moving down into those areas now, it suggests that at least the internal labeling of wave 3 should be kind of how would I say this? It suggested that I should kind of alter that slightly. This may not end up being the actual count either. As we look at the price movement every single day, you have to take into account what happens every single day and how that affects your overall view on the price action. And now I'm rambling, so I should just kind of get back to point, for God's sake. Okay, so we have a kind of a target in around the 118, 119 area for a wave 3 in green. So we're heading towards that right now. So again, if we get a turn down again on Monday and we break that today's low, which was at about 120.55, something like that, well, then it'll mean that this third wave here is extending even further. So for now, we're definitely in wave 3 green to the downside. Wave 3 green here to the downside, and the internal pattern is suggesting that we're in a third wave of that wave 3 green, and we may well even kind of extend further downwards. But for now, I'm going to view it as wave 3 brown of wave 3 green is nearing completion, and we may move up into wave 4, some sort of a corrective pattern, possibly a triangle wave 4. Again, Monday will most likely confirm or deny that point of view. If we get a further break of that 120 low there, or 120.50 low there, well, then we'll know that this third wave down is extending. And I don't care if it does that. So be it. Even better, you can see that the moving averages are most definitely shifting to a very bearish kind of setup right now. We've got an expansion of the difference between the short and the longer term moving average there. So we may well have, we've got a death cross, we may well have an acceleration downwards away from the longer term moving average, which would definitely fit with a third wave. And if it does extend even further, fantastic, brilliant. It means we're looking most definitely down into a large degree wave C, black to the downside. Okay, so let's move on to pound dollar, already running over time. Pound dollar gave us, again, a death cross today. So we've got a nice bearish momentum setup off the high, which is sweet, it's perfect. We've got an extension downwards, which again, the short-term pattern is a little bit up for grabs at the moment, but I think we can more or less confirm that we've seen the highs for pound dollar, and we're going to head way downwards. So here's the this is the 30-minute chart. I'll go out to the hourly chart here. There's the recent high, 143.76, I think, within a pip or two. I think we could see, there's two ways you can view this right now. Let's get a little marker out. We could be going 1, 2, 3, 4, 5 and call that wave 1. Or like I've shown on the chart right now, I'm showing a 1, 2, 3, 4, 5 wave 1 with a wave 2 already complete. The way we'll be able to distinguish between those two counts and which one is the actual most preferred one would be if we get a rally back up into these areas of previous fourth waves. So these kind of rest periods here within the pattern. If we get a 3-wave move, say starting on Monday or Tuesday, if we get like a 3-wave counter trend rally back up to that 139, 140 area, well then I'll shift to the view that wave 1 finished at these lows around key support, and then wave 2 would be unfolding at that point. So either way, we're within a pretty short-term pattern moving into a long-term downtrend, and I'm kind of, given today's kind of let's say a pretty significant drop, and the kind of oversold nature in the short term, I'm kind of shifting towards this view that the larger wave one is a very real possibility, and we might get some sort of a reaction early next week with the kind of let's say 200 or 300 point counter, or possible 200 point counter trend rally up into the 139s again as a wave two. But if that happens, well, then at that point we will have a pretty decent degree 1-2 pattern off the high, which will be a bearish Elliott wave signal along with the momentum signals that we're getting right now. So we're definitely moving into very real, let's say, bearish trade setup here. Okay, so let's move to dollar yen. This one, the short-term pattern is kind of flinching between one. It's flicking between one view or the other right now. I'm still thinking that we're in a fourth wave, and it's possibly an expanded flat. With this kind of narrow action over the last few days has not helped. Let's say the internal wave layout here, but the fact that we dropped again today does kind of indicate that we're still within a kind of a correction, at possibly a fourth wave correction within a third wave. So again, every day gives us another little nugget of information that we add to the kind of the palette of the pattern that we have developing. But so far, I think we're still within a possible fourth wave correction, and this kind of sharper move down today may well be a wave C of 4 here. The other way to view it would be that wave 4 is actually at that particular low there on, what was that, Monday or Tuesday? Yeah, Tuesday. I don't think so, because that's such a sharp move. It looks like an initial decline within a larger correction. Maybe, maybe not. There's also another way of viewing that, which would be that this particular three-wave decline here was wave A, and we've got wave B in a three-wave rise up to today's highs, and now we're looking at wave C, which would be like a 335 kind of expanded flat. Again, an expanded flat wave 4. So the only difference between that would be that this would be the high of wave 3. Again, you could take or leave that. Either way, it doesn't change anything for the fact that this would be it doesn't change anything in the view that this is a corrective wave 4. So for early next week, I would want to see this like Monday, possibly by the end of Monday, see this wave 4 complete. And I don't want to see a break of 107.49, which was the previous wave, in around the area of previous wave 1. I would like to see this previous low here, 108.50, kind of hold this pattern for the moment, and then we get a further move up to complete a possible third wave in green here. So that's dollar yen. Let's get on to stocks. Now, I've been talking about, again, this is a developing bearish pattern to the downside. When you start labeling, or when you start moving into a new pattern or a completely new trend, well, then you're always kind of open to having to reinterpret the action. I'm kind of moving in favor of shifting this wave count up by 1, maybe even 2 degrees. Well, for 1 for the moment anyway. So the initial move down is now viewed as a wave 1, but we may go 1 degree higher than that with wave 1 with brackets. So this could be 1, 2, 1, 2, 1. We would shift this green labels down another degree, and these gray labels would go down another degree. So there's much of a muchness in it. I mean, we're still tracking a bearish pattern to the downside of a series of 5 waves down, 3 waves up, 5 waves down, 3 waves up, 5 waves down, 3 waves up. So nothing really changes apart from the ability to use further labels without going and getting lost in the weeds. So today's action. Oh, sorry, where am I going? I should go to the 1 hour chart here. Today's action. Obviously, yesterday I kind of the short-term update, or the short-term pattern suggested a 3-wave rise off the recent low, which again suggested a possible complete correction in a wave, in a possible wave 2. So I shifted the wave count down by 1 degree, and which kind of, yeah, I'm happier with it, because the high came in around the 61.8% retracement of that larger move down, and we can definitely read this as 1, 2, a very sharp move down in wave 3, correction in wave 4, and then a slight new low at wave 5. Okay, so we have 5 waves down. We have the possible 3 waves up complete again at a lower degree. So we've got now 4 degrees of 1, 2 waves to the downside. Pretty clear. And again, we're around this resistance line again, connecting the recent highs. Excuse me. So what I would like to see happen early next week would be another impulse pattern to the downside. If we go to the 4-hour chart, I kind of want to lay out what I would like to see from here. So we've got these series of 1-2 patterns to the downside. How this develops from here is only it's only one way, really. We get, at some point in the very near future, we'll get an expansion lower within a third wave of some degree. Again, it kind of depends on the short-term pattern, how it unfolds from here. I mean, if we get a further lower degree, 1, 2 off, say, the recent highs of Thursday here, well, then that will most definitely cause me to shift the pattern, like I said, 1 degree, or move the pattern up 1 degree. Give me more kind of wiggle room with the count as it goes on. But a development of another 5-3 pattern to the downside again just shows that we're kind of moving into a bearish trend at a very large degree, and it takes time for these patterns to unfold before you see like a pure all-out kind of acceleration to the downside. So nothing has changed this week. In fact, the price action has just shifted it, has just kind of played out in a very expected manner with regard to, let's say, the development of a new bear market. We can all, I myself included, can be very impatient about these things, and I can you almost want it to happen immediately, even though I've been waiting for years. We've been tracking the unfolding previous bull market for years before that. We almost want the bear market to happen like the quick crack of a whip, but it ain't going to work out like that. And it'll be a while before we even see, like, we'll start to see accelerations lower in the stock market, but it'll be a while, 6 months, before you even see that effect kind of move into the economic side of things, where you start to see rising, let's say, initial claims and rising outright unemployment figures. You'll start to see the beginnings of, let's say, the grinding of the gears in the credit markets, and people starting to really take their hands off or step back from kind of investment decisions. So it happens first within the stock market. People don't particularly realize it until it starts to weed its way into the actual economy itself. Okay, so for next week, I want to see either another 1-2 pattern to the downside develop. Again, just going with the theme of what's been happening of late. If we got a break of key support at 23,360, that would be the previous extreme low. Well, then, yes, we could probably say at that point that a third wave of either gray labels here or green labels, if I shift the pattern, which I probably will over the weekend, we can say that a third wave at a pretty high degree is beginning, and from that point we can just look solidly lower. Okay, so I think we've completed a three-wave pattern. Let's see how early trading on Monday pans out. The outlook for next week is most definitely down. Okay, so let's move on to gold. Like I said yesterday, we've hit that kind of 13.15 area that I've been looking at for a while, and the reason why I had been looking at that 13.15 area was because the alternate count suggests a possible leading diagonal here, 5-wave pattern, maybe, or sorry, 1, 2, 3, 4, and 5 in a possible wave 1 to the upside. And off that high, we've seen a pretty clear 3-wave pattern to the downside developing. So 13.15 was kind of a culmination of previous levels there, and it was let's say it would be the point where the pattern would hit this declining lower trend line there. We've hit that, and again, I'm still in two minds about whether this the operating wave count is the correct one or this short-term alternate wave count is the correct one. We won't know that until we get a break of that previous high. I think it's around 13.56, or let's move on to that short-term. Yeah, 13.55. If we got a break above 13.55 from here with a corrective higher low, well, then we know that we're moving out of the corrective phase into the third wave up. And obviously a break of that extreme resistance there, 130 at that extreme point, 1366 would be a confirmation of the move up in wave 3. Excuse me. So today we're kind of looking for signals in favor or against one or the other. So today we've had a little move up back above that previous wave A low there, 1321. We're kind of sitting at that point right now. It's still the rise off that 1315 low doesn't look, even if we go down into, let's say, the half-hour chart there. Let's get rid of that. That move off the low doesn't look in any way in 5 waves. It looks very corrective, really. So I'd probably suggest that Monday would bring a move lower again towards these short-term support levels there around 1307 to 1303. Ideally, would get a break of 1303 into about the 1300 level, and that would that would most definitely complete a correction for me at a very large degree. Even at this point, I'm still looking higher. My eyes are open for a possible kind of impulse move to the upside to move the pattern into the next major trend, which I expect to be up. So for early next week, or for next week anyway, we would likely see a completion of the corrective structures. We're kind of very long in the tooth right now on this sideways pattern. For me, it really can't go on for very much more than a couple of days. We've got a nice positive divergence there on the 4-hour chart of kind of extreme oversold levels. So the price will not be far behind in that case. So for next week, we're going to still kind of keep our eye on the alternate pattern, the alternate wave count for either wave for indications of a move up into a possible third wave and a real, most likely, a pretty powerful, over the next, say, 3 to 6 months, most likely powerful move up in the gold price. Okay, so let's get on to crude oil. Today saw a kind of an extension of the corrective move, and I still don't know if it's complete. We've got a new low below the 67.11 area that we had. Excuse me, 67.11. No, sorry, not 67.11. The previous low was 67.70 or thereabouts. We've got a slight new low below that, and off that low, we've had a pretty decent spike this afternoon. Whether that's the beginning of the third wave up or not is open to interpretation. I'm still expecting a third wave. There is one other way that it's kind of dawned on me over the last, let's say, the few hours that I've been looking at this. We may well have a kind of a larger degree contracting triangle unfolding here as well. So we've got a kind of a declining peaks here, interim peaks with corrective rallies within them. With corrective looking, I mean, you could spin this rise here in wave one either way. I mean, that could be, most definitely you could view that as a three wave move also. So again, we're within the weeds of a correction, and whether this develops even further on Monday and Tuesday, let's say if we get a tightening of the range or a continuation of this very tight range, we'll probably shift to viewing this whole move as a fourth wave correction, and we'd move that wave 4 over here. So we'd have like an A, B, C, D, and E internal wave pattern there. Again, that's up to the market to decide which it wants to go with for the moment. I still think it's corrective, and I still think we'll get a final pop up into the kind of late 71s, early 72s to complete a 5-wave pattern. And that 5-wave pattern is, let me get rid of those squiggles there. So we've got that, again, contracting triangle, wave 4. We're looking for a 5th wave to complete. So 1, 2, 3, 4, 5 to the upside. 72 is kind of where convergence of targets is kind of happening. So break of 70 into the 71s would most definitely do it for me, and would start to look for a shift back into the downside at that point. Most definitely, if we get a hit of 72 and let's say a little tap of that upper trend line there, we'll see how it develops. It looks like we won't get much more than another week to the upside on this. So by the end of next week, if we're talking on this video and we see that we've had a move up to the 72 area, well, then at that point we'll be looking for lower highs and a kind of, let's say, a right-hand shoulder to develop off these this previous 5-wave move to the upside. So that's kind of looking out, let's say, a month ahead or so at this stage. For next week, I definitely want to see a completion of this 5 waves up into the upper 71, 72 area maybe. And I think that kind of closes us out for this week. Again, I've gone long. If you managed to stay till the end of this video, well done to you. I hope you have a great weekend, and we'll see you back here on Monday. Godspeed. Bye-bye.